Well, I'm here with two of my favorite people at Fidelity, Ramona Persaud and Denise Chisholm.
You say
Welcome.
that to everyone.
He probably does.
No, actually, that's that's you two are absolutely the top of the top. So thank you for being here. You've been work colleagues and friends for almost 20 years, which is pretty amazing. Now, Denise, and I'm going to put you on the spot a little.
Okay.
What is it the one thing, maybe more than one thing, that you admire the most about your friend Ramona?
Oh my gosh. I mean, so much over 20 years. So it has been a long history. I mean, I started off as somebody who didn't know anything about investing, and when Ramona was more of a junior analyst at that time. So I learned a lot about the markets from Ramona, and it was right before the financial crisis, and Ramona was the banking analyst. So in a lot of ways, it was
After being the housing analyst.
right.
Oh, wow.
Exactly.
Storm.
Right. We did a lot of data analysis together very early on about housing and delinquencies in housing. So I think it was very forming for me as a research analyst to work with somebody who was very interested in data and very interested in the projections of data at the time, which were critical, I think, to investing.
That's a really good way to think about it. Like we connected on our mutual love of data.
Yeah. No, I think
and what
that's
you
right.
can do with data. And it
That's
doesn't
right.
happen often
No.
in this world.
No.
At least certainly 20 years ago. I think now it's more common, especially with the people who come out of universities today. A lot of them know how to code, even if they weren't computer science students. And so there's this more greater embracing of data today, but 20, 30 years ago, that was unusual.
Yes.
And that was an initial way that we connected. And then we realized that we connect in many other ways.
Yes, you very much think outside the box as an investor, which is atypical, I think, for Fidelity. And I think that that's one of the reasons why we were always so comfortable around each other.
Yeah.
Is because we're both out of the box thinkers and a little bit atypical for this place.
Very much so, in many ways.
Ramona, how do you work with Denise? How do you use, Denise's big brain and all her thinking and all her data?
We banter a lot. I think it starts with one, like initially it was this just love of data and what you could do with data.
Yeah.
Right.
And so I'd found like a kindred spirit initially, right?
Yeah.
Fair? At a time when like data wasn't as sexy as it is today.
Right.
Yep.
And being an engineer, like that's why I was into it and you were a statistics person.
Yep.
Right? So, but then we realized very quickly there was this incredible like chemistry. We just have this like flow when we start talking and not just about work.
No, I think
like we went in so many different like life and it wasn't even like non-work stuff. Like I wasn't even married with kids yet.
That's right.
So it wasn't like that we were at similar stages. It was chemistry on lots of different dimensions. And then you started doing macro statistical analysis.
Yeah.
Which was phenomenal for me because the core of what we do is bottom-up fundamental stock-by-stock work, company-by-company work. But to be able to combine that with top-down, very rigorous analytical top-down work, I think just broadened my perspective and just helps me to think beyond convention when I'm doing my research and my investing. So lots of dimensions that we connect on.
I think that's pretty powerful because, as Denise said, called you an out-of-the-box thinker, and then you're saying, Denise is forcing you to be even further out of the box. I think that's quite amazing.
Yeah, I'm a mosaic person.
Right, okay.
Period. Like this is just one, work is just one way that my mosaicness expresses. And by that, I mean, I like taking in inputs from all different dimensions to come to conclusions and to make decisions. And I think what has been great about working with Denise is she's a huge part. She's helped me to like stretch my mosaic.
Wow.
And then the part of my mosaic that you show up in is big and robust and very analytical. So it makes
my push each other too.
Push each other a lot. And the fact that there's great chemistry, we're very comfortable disagreeing.
Yeah.
Right.
Yeah.
In really like fun ways.
Yeah.
Like
yes.
Well,
for sure.
Disagreeing in fun ways.
Yeah. We always have fun.
I was looking at you wondering how far I can go in describing that. Like, what could I say about how we disagree? I'm going to keep it
spicy.
I'm going to keep it spicy. It gets
well,
very
that's
spicy.
Good.
Yeah.
Leads to better decisions, I hope. I
think just a more robust investment.
The natural like ease, just like in any relationship, right? When there's just an ease and a chemistry, it's easier to disagree.
Right.
And so we have like a lot of conflict.
Right.
In a very healthy way.
Right. Absolutely.
We argue well.
That could be the title of this. A lot of healthy conflict.
Right.
But I think that's what like in any any endeavor that requires more than one person, you have to be able to disagree
Yes.
in a healthy way, to see your blind spots, see
Right.
what you're missing, to open up your perspective, to make better decisions,
Right.
to get to better outcomes. So I view
Right.
you as like fundamental to that.
Yeah, thank you.
Yeah.
Oh, that's a great background. Now, I'm going to get a little deeper in here. So, Denise, your title says, what is it? Director of Quantitative Market Strategy. Did I get that right?
Fancy.
It is very fancy.
Yes. Yes.
Now, I know what all those words mean,
Yes.
but why don't you
Yeah,
sort of tell us, what's your day-to-day?
No, the day-to-day at the base level, as much as quant seems very complicated, and
Right.
investing seems complicated, it's very, very simple. I mean, you boil down all concepts to whatever variable you are concerned about. Let's look through history,
Mhm.
look at the data, and see if there's a historical relationship, and
Right.
B, you should be concerned or not. So that's how you build the mosaic. So I'll say it simply. Again, what I do is pretty at the base simple. A lot of people are worried about buying stocks right now because they're expensive. So let's take the data that we have
Right.
going back to the 60s, divide up that valuation in quartiles, and see what your odds are. And what you find is that a lot of things about investing are very counterintuitive.
Okay.
Things that you thought would be powerful predictors of immediate performance in the future aren't nearly as critical as you think. And there are no nevers and always in investing. So I'm not saying that it can't be at a certain time, but I think that history can show you when you should feel comfortable betting on something because of that historical relationship, and when you should take some pause and maybe some notable, red flags from the market saying this isn't the thing that you should critically be watching right now. So it's turning those historical relationships into things that I think can inform our investment views. So that's the director of quantitative market strategy.
Oh, that sounds very cool. Now, as a portfolio manager, Ramona, you literally have a wealth of information at your fingertips. Research, you can dig into anything. I'm going to challenge you a little here. If you're looking at a new investment or a new sort of thought or sector or whatever, what is the one ratio, the one piece of information that sort of you're drawn to almost immediately?
Good question, to boil it down to one thing. And you're right, there's a ton of information. There's actually more and more information with time, to the point about data being sort of commoditized as time goes by. So essentially your signal to noise ratio goes down over time because the noise grows faster than the signal, right? And the job is literally figuring out what the signal is. So if I were to be conceptual and abstract, the one thing I'm looking for is signal. And the signal for in an ever-growing noise, the signal for me is a comparison of valuation to quality.
Okay.
So how much business quality can I get per unit of valuation, right?
Okay.
How can I maximize business quality for as little cost, just defined as valuation as possible. So that's
Very cool.
That's a great way to describe it. I've never heard you describe it that way. That's a great way to describe it.
Thank you.
Welcome. Yeah.
Now, but staying with you, Ramona, so I know a bit about your backstory. You mentioned you were an engineer. What was the spark of investing? What caught your attention? Because, there's lots of parts of investing, as you see with both of your jobs. Yeah, and I want to know Denise's story, but what was the spark? What was the thing that got you in here?
Goodness, it's totally circuitous and not at all planned, right? Unplanned. So it was random. I ended up working in a capital markets environment when I was in college at 18 years old as a college part-time job to make some money to pay for books. And it just happened to be finance. I like to joke that if you grew up in New York City, you either end up in fashion or finance. So randomly, it was finance. I did have many fashion jobs, though.
Yeah, that's good. Yeah.
So I think it was just like the randomness of it. But I loved the pace of that capital market environment. I loved that it was performance-oriented. So it didn't matter sort of what your identity was, as long as you could deliver and perform. That really appealed to me. And so I pursued it.
Numbers and data.
Pace and performance.
There you go.
Yeah.
That's great.
Right? Yeah. And engineering, the pace of engineering. I had done some engineering things as well. Engineering was not nearly as much pace and performance for me. So finance just worked. And then it was a question of figuring out where in finance made sense for me. And because I loved research, which is essentially figuring out how things work. How to take something apart and put it back together and make it better. Which is very engineering, and that's what a company is. I ended up in investing.
Wow. Now, Denise, what was the spark? What brought you here?
I was actually really interested in investing, but partly because my husband was in investing. He was a bond market analyst.
Okay.
And I was in research at the time for a cost of living firm. I love data. I love data analysis, and
Right.
I love that process. But to your point about pace, I think that's a
Yeah.
great way to put it. It was a little bit snoozy
Mm.
in the sense that there's only so much you can do with the data, where investing just felt never ending.
Right.
It felt like a never ending research project that I was very interested in pursuing. And Fidelity had that unique role at the time where they were really looking for statisticians. So I was lucky enough to sort of fall backwards into that role. And that really just fit with both my personality and sort of what I wanted to do.
Right.
Now, most people who started in that role went on to be fundamental analysts, and that was not at all my passion. I really wanted to stay close to the data and close to statistics and sort of migrate over all of the groups, all of the sectors to learn the critical drivers and then do the same when I worked, and this is when I got into macro, do the same for our international group. And that's when this unique process of using these historical probabilities got built into what I would call a real research process.
Wow. I think you just summed up something really interesting about Fidelity. You both have different ways in here. You both have different skill sets and attributes. And then once you get in here, you find your way, right? I think that's you found your way. You've both built great sort of niches for yourself in this. So I think that's a real sort of testament to the culture of Fidelity.
It's culture, and I
Right.
like to say that the culture is it it's become a very successful company, but a core part of the culture is nimble inside of big.
Yeah.
Right. Yeah.
That's so
right.
true.
So while we get bigger and bigger because companies run really well and becomes very successful in its industry, we're really intentional about staying nimble.
Mhm.
And so that was what drew me to the company as well. Like, very resource rich, but you could stay very agile inside of the company, which means that if there's this agility, you can kind of like find your path
Right.
based on what appeals to you.
Wow.
But you have to be open to a circuitous type of
Yeah. Yeah.
a discovery
Right.
process. There's not a lot of visibility in terms of where your path is going to lead,
Right.
and you have to be okay with that,
Right.
which is essentially being okay with uncertainty, which is essential to
To the job.
investing job.
Yes.
Yeah.
That is.